Hello, everyone. I'm happy to be here with you guys today. I have really not uploaded any video for a long time. I think it's over 2 years, and that is largely because I've been on the lookout for very great, high performing, high success rate working strategies. So, this strategy that I would like to teach you today, I have been using since last year, December. I've been working on this strategy and I have confirmed that it actually gives 100% success rate while adhering to um, money management, you know, good lot sizes, safe trading, and very effective trading tactics. Without wasting much of your time, I would like to introduce the instrument which I will be talking about today. Boom 1000. This strategy pretty much works on all the instruments across the crash and boom genre, but this particular one, but it is important to note that all the crash and boom, whether it is boom 1000, whether it is 500 or 300, or crash 1000, 500 or 300, they are unique in the sense that there is a different approach to particularly trade them in order to achieve maximum success or profit from them. So this one will be focusing mainly on um, boom 1000. Now this indicators needed for this uh, strategy is the RSI, the relative strength index. So please ignore these ones. You know these these ones, the Bollinger Bands and the moving averages. The main indicator for this strategy is your RSI. And the RSI do not have any special settings. It is the default settings. This strategy is the simplest and yet the most effective strategy you can come across or you probably have ever used. Now, this strategy requires a very huge uh, sense of patience. You need to be very patient with it, and it delivers or promises to deliver consistent growth while being safe. And the best amount or trading capital to use for this one is probably $100, but you can use less, and I will explain how you can use lower amounts and still be able to, um, you know, increase or make the most from smaller capital. Now, um, this strategy also makes provision for the worst of the worst scenarios because we all, those of you who already have experience with trading, you know that as much as there are a lot of perfect conditions to trade, there are also the worst conditions of to trade where everything you know just stops working. Like you just don't understand why this thing is just not working, or is not happening the way you want. So this strategy makes provision for the worst of the worst trading conditions. Now, this strategy is centered on catching spikes. Catching spikes, it helps you catch spikes in a way that um, makes it profitable and safe. Like I said in the beginning of this video, that this strategy you know uh, helps you manage your funds properly and helps you in your incremental growth. It helps you catch spikes. So let us just go straight to the worst of the worst trading conditions in catching spikes. I know we may have seen situations in the course of trading crash and boom where there is a huge spread. The spread just keeps going and going and going and going and going. The spike just doesn't want to happen. and sometimes we use our lot sizes, we enter the trade and we get swallowed up in it. It drains out our capital and we get frustrated. This particular strategy makes provision for the worst of the worst. An example is this one. You can see how huge this spread is. Very huge. From the very top all the way down. I believe if we count all these candlesticks, they are probably more than 60 to 70 candlesticks. So this strategy helps, and you can see the RSI. The RSI has gone straight below uh, zero, right? This is zero. This probably got to 0.02 or 0.01 as the case may be, but below zero. Now this strategy, we only enter our trades when the market comes. We only contemplate entering our trades. Like we plan to enter our trades when the price or the RSI uh, goes below zero, right? So from 0 point, this area, you understand? So this area gives you a safe entry zone. So you can see that the RSI at this area is below, the RSI here is below zero. The RSI below zero, this is 0.87 around here, and this is where the price was. This is 0.87. So what I like to do in such a situation where in boom it's spreading and the RSI has gotten below zero is to take my first trade, because the spike can happen at any moment, but this point becomes a safe point to enter uh, the trade. Safe point in the sense that if it keeps drawing down from this point, no matter how long it draws down, no matter where it draws down to, it's most likely coming back. When it starts to spike, it's most likely going to spike towards this region, right? So I will take my trade, first of all, from around here. I'm sorry, I'm finding it difficult to pinpoint this point, but let me just draw around here. So around here, right? Now, if I'm using the $100, I'm using the $100 capital, and I intend to use one lot, because one lot will help you maximize the profit you're going to be making, but you want to do it in a way that just in case it keeps drawing down, it won't just swallow you up or erase your capital. So if I intend to use one lot, I will now infuse the dollar cost averaging style of trading or investment. Dollar cost style of investment or trading involves you taking trades at different interval. So for instance, if I intend to use one lot to take my trade, I'm going to break my lot size down to 5 places. That's like 0.20, 0.20 into 5 places. So I will start my 0.20 at this point, right? 0.20 at this point. First 0.20, then if I'm losing the drawdown, enters um um like -$2 or thereabouts, I will take another 0.20. If the newest trade enters another -$2 around here, I will take another 0.20, as the case may be. So that is dollar cost averaging. Now, when it decides to eventually start spiking, you can see it covered up. It covered up all the drawdown. It covered up from the very first entry of your trade. You can see the first spike. You can see the first spike. Now, you can see the first spike, second spike. This is the worst of the worst situation. So, what this strategy actually helps you achieve is to wade out all these noise to help control or manage the worst of the worst case scenario in the market. And there are situations where it has a very little spike, right? There are situations where it has a very little spike like this, then it continues going, right? But just because you are using your 0.20, you didn't use, trust me, if you had used one lot around here, you would have been panicking the moment it kept going down indefinitely. You would have been on panic mode. But because you broke it down, you reduce the weight all these the one lot loss would have had on all this. So you spread it across. You spread the lots across all these drawdown. It's very important. Yes, it guarantees you a smaller profit, right? But it's it is safe. It is safer for you to be able to remain in the market, break even, or possibly incrementally increase your profit. This is a very effective strategy that I use on Boom 1000. Trust me, all the crash and boom instruments, they have, though they work very similarly, but they have their particular tactic that is used to trade them in particular. And I'm going to be dropping videos, in the course of this year. Yeah, I'm going to be as frequent as I can. I've not dropped videos in a while, but I'm going to try as much as possible to explain the six different kind of crash and boom and how I treat them. Particularly, like everything I'm saying about boom is particular to boom, because I've noticed that the way the boom spread is not the way the boom 500 spread is also not the way the boom 300 spread, right? So every spike in boom 1000 occurs, after 1000 ticks, as in on average, it's not just 1000 ticks, but on average 1000 ticks. And we all know that in 1 minute we have over 60 ticks, right? In 1 minute. So every second is like a tick. So just imagine 1000 tick will not spread like this. So, but on average, 1000 ticks means a spike. But in situations like this, trust me, there are a lot more. This is over 3000 ticks, way more ticks. So how do you get prepared, to control or to manage this kind of situation, with a small capital? So it's also important that we know that those of us who have lower capital, like capitals below $100 or less, even less than 50, the best way to trade these kinds of dollar cost averaging kind of tactic or approach is to use your mini or your micro lots. Your micro lots, I've talked about this in my previous videos, where you take a lot size. Let's say the minimum lot size for Boom 1000 is 0.20, right? That's the minimum lot size. So a micro lot is going to be below 0.20, around 0.15, 0.10, 0.5, 0.1, right? So in order to be able to take anything less than 0.20, let's say we are taking 0.05, right? So if you want to take 0.05, you first take 0.25, then close 0.20. I've talked about this in my previous videos, but a straight if you want a straight to the point lecture on how to take micro lots, you can drop a comment, on the comment section, or chat me or private. Another very important thing to note in determining whether there are going to be multiple spikes, you know, in this kind of in taking this kind of trade, is the head and shoulder, or should I say the inverted head and shoulder formation, right? So imagine this is a very good head and shoulder formation. So this is the first shoulder, this is a nice neckline over here. Then you just wait for a retraction, then boom, right? So there are a lot of them, and it is very important that there are a lot of head and shoulder or inverted head and shoulder formation in the course of the spread in Boom 1000. But take note of the ones that happen after a long spread. The short ones, avoid the short ones, right? Avoid the short uh, head and shoulder formation. You can see this one. This is the first shoulder, the head, second shoulder and neckline. Avoid these kind of formations. They are very short, coming from a spike. They are very short, so avoid them. So take your chance on the ones that come from very long spread. So for instance, this is a good one. You can see shoulder, head, shoulder, boom. All right. Then there are a lot of them. There are a lot of them. Look at another one. You can see shoulder, boom, right? So take take your chance on the ones that are coming from seemingly long uh, spread. They are very, or they are also very effective. Shoulder, boom. So they are very effective. They are very effective. I cannot overemphasize this. They are very effective. So just back test. Check out your charts and you backtest all these strategies and see how effective. You can as well try them out. There's a small one here. You can as well try them out in your demo account, right? But these strategies are very, very effective. Yeah, many thanks for watching and do expect my next um, video. Thank you.